What happens at Wall Street? Wall Street is an important part of American business history. It was the birthplace of the stock market, which started off as an informal meeting in 1792 for traders who met at a local coffee house to buy and sell securities without any centralized organization or regulation. Wall Street is the heart of the global financial markets. The financial markets are a network that connects buyers and sellers of securities, such as stocks, bonds, and futures contracts. These markets have been in existence since ancient times. In this video, I'll provide you an overview of the history of Wall Street, as well as the key events that have shaped it over time. This information is mainly aimed at beginners or those who are not familiar with Wall Street jargon. It's also helpful to anyone looking for information about finance or investment banking. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now, subscribe to our channel, and click the notification bell to be notified when new videos are released. What is Wall Street? Wall Street refers to the financial district of Lower Manhattan in New York City, which is home to some of the world's most important financial institutions, such as the New York Stock Exchange, NYSE, and NASDAQ. The area also contains several large skyscrapers, such as the J.P. Morgan Chase Tower. Wall Street is a metaphor for the stock market, or more specifically, a financial market for buying and selling stocks, bonds, derivatives, investment funds, etc. The word Wall Street likely originated from an 18th century Dutch term meaning walling in place, referring to the Dutch wall that once comprised the lower end of Manhattan's southern tip, the modern-day financial district. There's also credible reason to believe that the term Wall Street originated from London's Lombard Street, where brokers would stand and sell shares of stock-holding companies to investors through an intermediary called a broker. What makes Wall Street so interesting, and why do people want to be in it? There are a lot of reasons why Wall Street is interesting and why people want to be in it. First of all, it is about making money. Secondly, the job opportunities are very diverse and lucrative. Thirdly, the industry offers a lot of personal development opportunities and expertise that can help people build their careers on these topics. The financial industry offers many benefits to those who choose to be in it. Opportunities for career development and personal growth. Career progression and standardization for those who choose to work for larger corporations. Variety of jobs with highly paid salaries. What is a stock and how it works? The term stock refers to shares or ownership share in a company. It is often associated with investments for the purpose of speculation, but it can also be used to describe goods that are available in large quantities. In the financial world, a stock is a type of security that represents ownership in a corporation or company. In the simplest case, an investor buys a stock from the corporate and receives voting rights and also shares in the company's profits. The reason for this is because stocks represent part ownership in a business and can be traded on trading markets such as securities exchanges. Investors buy and sell stocks in order to make money from dividends, capital gains, or simply to try and profit from short-term price movements. A stock has two parts, one that gives it value called the market value, and one that gives its holder legal title called the certificate. The market value is based on how much someone else would be willing to pay for a given company, while the certificate gives its holder legal title to that company. Stocks typically are bought and sold on the open market, and the price of the stock fluctuates accordingly. The trading of stocks creates periodic cash flows for society that assist businesses in their development and expansion. Stock markets form important segments of many capitalistic economies, where investors trade various financial assets such as stocks, bonds, commodities, and currencies. The trading of these assets provides substantial benefits for both individuals who invest in them and for society at large. How to invest in stocks for beginners? There are many factors to consider when purchasing shares, such as the price of the stock, future earnings, and potential growth. A beginner can purchase stocks by opening an account with an online broker like Ameritrade, Trade, Questrade, or Wealthsimple if you're in Canada. They can set up automatic investment plans and set limits that allow them to monitor their investments while they sleep or on the weekends. For beginner investors who don't want to worry about managing their investments day to day, they can simply leave it alone and let their broker do it for them. What are some of the common terms used on Wall Street? The vernacular of Wall Street is built on jargon that can be difficult for outside investors to understand. Common terms used on Wall Street include Sharpe ratio. The Sharpe ratio is a measurement of the reward you receive for investing in an asset with some risk. The more risky the asset, the higher the Sharpe ratio will be. A low-risk investment with a high Sharpe ratio will have a positive Sharpe ratio. Carry trade. The carry trade is a strategy used by investors to make money through an exchange rate. They seek to borrow at a low interest rate, sell the currency for a higher valued currency, and use the difference to make money. Forward contract. Forward contracts in the world of Wall Street are agreements in which one party agrees to buy or sell an asset at a future date. The buyer in this agreement pays the seller for the asset when they agree to buy it, and the seller receives payment when they agree to sell it. Option. In the world of finance, options are a type of derivative. They can be used as a way to speculate on the future price movement of a particular asset like stocks. Options are contracts that allow you to buy and sell shares in a company. There's a fixed amount of time allotted for the option to be exercised. If an investor purchases an option, then they will have the opportunity to purchase the company's stock at a fixed price before it goes public and becomes tradable on the market. Margin trading. Margin trading is the practice of borrowing money from a broker to purchase securities. This allows investors to buy more shares than they would typically be able to afford. Margin trading is associated with high levels of risk, as it increases the potential for large losses and can lead to financial ruin if done incorrectly. The Wall Street crash of 1929. The Wall Street crash in 1929, also known as the Great Depression, was a major economic downturn that hit North American markets in the early 20th century. The crash began in October 1929, when the stock market started to decline quickly. Investors were uncertain about where to put their money because of an over-leveraged economy, which caused people to worry about their investments. The crash ultimately led to a period of 8 years without any economic growth, and 10 million Americans lost their jobs. People began to lose their confidence and stopped buying products from businesses that were growing at a rapid rate. This led many companies to go bankrupt and unable to produce what they promised their customers. The results of the crash were catastrophic for America's financial system. Although the crash was caused by a variety of factors, it is widely believed that a contributing factor was a lack of regulation in finance and trading systems. In response to the Wall Street crash, Roosevelt introduced New Deal policies that affected how business was conducted in America. The New Deal also created a government-sponsored agency called the Securities and Exchange Commission, SEC, which would be used to regulate investments by companies and individuals. How the stock market crashed in 2000. In the late 1990s, the dot-com bubble was inflated. The market went from a mere $5 trillion to almost $30 trillion in a span of 5 years. However, the market crashed and the valuation for stocks fell to just $8 trillion by 2000. Many theories have been put forward as to why this happened and what can be done about it. This video provides an overview of the 4 main factors that contributed to the stock market crash. The first is that there was too much money chasing stocks, as more and more people wanted to invest their money in them, which caused competition among companies to grow as they tried to raise prices for their shares. The second is that technology companies were overvalued due to investors, seeing them as having unlimited potential and not accounting for any problems they may have. How to prepare yourself for an upcoming recession or crash on Wall Street. The current economic condition is a major catalyst for the upcoming recession or crash. The next major economic crisis is looming, but people are unsure how to prepare for it. The first step is to figure out what you want your money to do for you in the future. There are several ways that people can prepare for an approaching recession, but there are also some steps that one should avoid doing. It's important not to take on more debt than necessary or put your life savings into investments that may not be worth it during difficult times. Saving more money now will make sure you have more options when the economy goes south, even if it means living off of less at first. It will also make sure that you feel comfortable with your lifestyle and don't feel like anything has changed too drastically over time. Individuals and businesses need to prepare themselves by keeping up with their day-to-day activities and maintaining a healthy business. This includes paying down debt, making sure that your finances are healthy, and maintaining an emergency fund in case of unemployment or financial losses. If you are watching this, you might not be a small business owner. However, if your company is a small business or a large one that deals with financial transactions, there is a potential for an economic downturn. The first step to preparing your company for this type of economic climate is to assess the risk factors and know what needs to be done. The next step would be to make sure that the company has enough cash on hand for emergencies. Another way of preparing your company would be to build up more cash reserves by looking into different investment options such as stocks and bonds. Finally, it's important to have plans in place in case of possible layoffs and other scenarios. The new era of Wall Street. In this new era, the financial industry is constantly innovating to make it more efficient and attractive to investors. In order to do so, the industry has been migrating from a traditional model of investing towards a new way of trading. This model involves a lot more automation, which makes it easier for investors to tap into the market and see their share value rise. At present, there are a number of tools available in order to automate trading and investing that include algorithmic trading software and AI-based advisors. With these tools in place, traders can benefit from automated systems that give them an advantage over other traders by identifying patterns in the market and exploiting them before others do. There are three main ways in which AI-based advisors can help traders. Artificial intelligence is revolutionizing the world of trading. The technology has been around for quite some time, but it's only now that traders are able to benefit from it. Traders can use the advisors to develop strategies for their trading activities. The inside scoop on Wall Street and the most important changes coming in 2021 and beyond. Wall Street is a complex ecosystem with many players. It is not easy to understand the workings of the system without the help of an insider who has an experience in finance industry. While the stock market has been on a roller coaster ride this year, the future of Wall Street is much more interesting. The world is about to witness a wild ride in the next 6 years. The most important change in Wall Street will be in how companies are being run. They are being run differently because technology has changed the way companies work and have business models, which will lead to less massive empires and more concentrated power in smaller organizations. The leading sectors of the market are digital currency and cryptocurrencies, which have made a huge impact on the financial sector. The next decade will be very important for financial market. There will be a revolution in finance sector with blockchain. Blockchain technologies are opening up new opportunities for people looking to invest their money, but it comes with certain risks. Wall Street's predictions for 2021 and beyond. For many Americans, it's been more than a year of fear and panic. The deadliest global pandemic in a century has claimed more than 700,000 deaths, damaged the U.S. economy, and sent the stock market to its all-time low. Despite a backdrop of massive job losses, bankruptcies, and falling corporate earnings, markets have since made a dramatic rebound and recaptured record highs, defying the doomsayers. Big tech firms propelled the market higher as the Federal Reserve and Congress provided trillions of dollars in stimulus to a slumping economy. While the death toll from COVID-19 is staggering, analysts say the stock market is signaling Americans to be hopeful about 2021 and beyond. Why? You may ask. With the majority of Americans now fully vaccinated, the economy is likely to continue to improve. And Wall Street experts predict that investors will have another fantastic year. Conclusion: for those starting out on Wall Street as a complete beginner or advanced investor, doing anything in Wall Street is difficult. The market is intimidating, the people are intimidating, and the rules are intimidating. Fortunately, there's also one great thing about investing. It's easy to turn $1,000 into $100,000 in less than 10 years. After that initial investment, the trading process becomes easy with a little luck and discipline. If you're fortunate enough to have some money lying around, instead of saving it for something less important, this might be the perfect pursuit for you. So there you have it. If you enjoyed this video, smash the like button now, subscribe to our channel, and click the notification bell to be notified when new videos are released.